Welcome back to Investing Talk Podcast. Today, we're zeroing in on a company that's, well, a household name for many, General Mills. We're going to explore their upcoming earnings report and really try to understand what we can learn from the information we have right now. Understanding these pre-earnings insights can be incredibly valuable. Before we dive in, if you find our discussions helpful, please take a moment to subscribe, like this episode, maybe leave a comment below with your thoughts. It really does help us keep bringing you these analyses. And if you'd like to support our work, maybe consider buying us a coffee. You can find the link for that in the description. Also, if there's a specific company you'd like us to look into in a future discussion, please let us know in the comments. Okay, let's unpack what's on the horizon for General Mills. So let's start with the immediate future. When exactly is General Mills expected to report its earnings?
Right, so General Mills is set to report its earnings on September 17th, 2025, and that's before the market opens. This report covers their fiscal Q1 2026, kicks off their new fiscal year.
Okay, September 17th, Q1 26. And what are the analysts predicting for this quarter? What's the street thinking?
Well, consensus among analysts, and this is based on 10 analysts polled by Zacks, is for an earnings per share, an EPS of 81 cents. For revenue, the Zacks consensus is looking for about $4.17 billion.
81 cents EPS, 4.17 billion revenue.
Okay.
Yeah.
Yeah, and it's worth noting we couldn't find any credible whisper number in the sources for this one, so no strong unofficial street guess floating around.
Interesting. So a bit less informal chatter maybe. What has management actually said about their goals leading into this report? What's their strategy for this coming fiscal year?
They were pretty clear in their Q4 2025 release. Management stated their primary goal for fiscal 2026 is to restore volume-driven organic sales growth.
Volume-driven. Oh.
Exactly. The plan involves significant investments in consumer value, new product innovation, and, continued brand building. The CEO, Jeff Harmening, was quite direct. He said, I'm quoting roughly here, "Our number one goal in fiscal 2026 is to restore volume-driven organic sales growth. To do that, we'll invest further in consumer value, product news, innovation, and brand building."
That's a very clear statement of intent. Focusing on volume like that, it really suggests maybe a shift after maybe leaning on other strategies for a while.
I think that's exactly right. It signals they know they can't just rely on price increases anymore. They need people buying more of their stuff, not just paying more for the same amount.
Right. Well, understanding where a company is going often means looking back. So how has General Mills actually performed in recent quarters? Let's look at the recent track record.
Yeah, connecting this to the bigger picture, their recent history has been, well, a mixed bag, a bit choppy. If we look at Q4 fiscal 25, recorded back on June 25th, 2025, General Mills reported an EPS of just $0.54.
Wow, 54 cents.
Yeah, which is a really significant miss compared to the previous years of $1. Net income dropped 46% year over year to $302 million. And revenue was also down to $4.56 billion from $4.71 billion. That's a 3.3% drop year over year.
Oof, a 46% drop in net income is substantial. That really jumps out. What about the quarters before that one? Was Q4 an outlier or part of a trend?
Well, moving back through fiscal 25, Q3 actually saw an EPS of $0.74, which beat the consensus estimate of 71 cents. So that was better.
Okay.
But then Q2 FY25, the actual EPS was 69 cents, and that missed the consensus of 72 cents. And going back to Q1 FY25, they reported an EPS of 83 cents, which did beat the consensus of 79 cents. So you see, it's been a bit of a roller coaster. 2 beats and 2 misses in the last 4 quarters. Not exactly consistent.
Right, definitely inconsistent. So how did the stock react to all this, especially after that really rough Q4 miss?
Yeah, that Q4 miss and the revenue decline definitely had a clear impact. It wasn't good. Just as an example, if someone had bought the stock right after that report and held for 30 days, that strategy resulted in an annualized loss of negative 11.55%.
Minus 11.5% annualized. Ouch.
Exactly. And it significantly underperformed the benchmark index by almost 89%. With a maximum drawdown during that period of over 44%.
Wow, 44% drawdown. That shows some serious selling pressure. So what were the key metrics really driving these weaker results? What was going wrong operationally?
It really came down to volume and organic sales. They were consistently challenged throughout fiscal 2025. That's the core issue.
Makes sense why they're focusing on volume now then.
Precisely. That's why management is hammering home these investments in consumer value and innovation for the recovery. Now, on the plus side, they did have a divestiture gain, about $96 million, and they managed to reduce their restructuring and impairment costs quite a bit year over year.
Okay, some positives in the details.
Yes, but margin management is still a core effort. Net income and EPS have clearly faced cyclical pressure, mainly due to that cost inflation we've seen everywhere.
Okay, so beyond the core numbers, were there any other significant developments or news items during the quarter that could impact this upcoming report? Anything else listeners should be aware of?
Yes, there was a couple of notable points, actually. First, General Mills announced a dividend increase up to $0.61, payable on August 1st, 2025.
A dividend hike, even with the recent struggles.
Right. It generally indicates a certain level of confidence from management in their underlying financial position, despite those challenges. It signals they expect cash flow to hold up. But what's maybe more fascinating strategically is the announcement of Blue Buffalo's national fresh pet food launch. That's expected for late 2025.
Oh, Blue Buffalo fresh pet food. That sounds like a pretty big move into a premium space.
It really is. It's a significant product innovation and could definitely be a future growth driver if it catches on.
Okay, so how do these company-specific things, the dividend, the big pet food launch, how do they fit into the broader sector and the macroeconomic trends? Are they paddling upstream here?
Well, if we connect this to the bigger picture, consumer staple stocks, including packaged food companies like General Mills, they've all been facing margin pressure. It's sector-wide, mostly from input cost inflation.
Right, costs for everything went up.
Exactly. And they've largely tried to offset this through, cost management and pushing through price increases. But that has limits. The grocery sector generally is just highly sensitive to inflation, to competitive pricing, and crucially, to how well these innovation cycles work out.
So the Blue Buffalo launch is key then.
Very key. It really raises the question, can General Mills' new initiatives, like this fresh pet food, successfully navigate these broader headwinds? Can they find growth in premium niches?
And what are analysts saying about General Mills more recently, considering these points?
Analysts have definitely noted the focus on restoring organic sales via consumer value and product innovation. That message got through. They often highlight this inherent risk, though the risk of persistent margin pressure versus the potential, the hope for volume recovery. It's a balancing act. Zacks, for instance, has flagged volatility for General Mills, specifically because of its previous underperformance in earnings and revenue growth. So there's caution baked in.
Okay, so looking ahead to September 17th, let's talk scenarios. What's a potential best case look like for General Mills when this report drops?
A bullish case, the best case, would involve seeing improved volume trends, maybe some early signs that the value investments are working, and successful product launches, especially positive news or early signs from that Blue Buffalo fresh pet food rollout. That could drive organic revenue growth and maybe spark a share price recovery.
Right.
Also, if margin initiatives and cost savings surprise to the upside, maybe if input cost inflation cools off faster than expected, that would obviously help too.
So better volume, good Blue Buffalo news, maybe some margin relief.
That's the optimistic picture, yes.
And on the flip side, the bearish scenario, what would that look like?
The bearish case is basically more the same recent pain. Continued revenue and EPS pressure that comes from weak volumes, ongoing consumer price sensitivity.
Another miss, basically.
Potentially, yes.
Yeah.
Leading to further earnings misses. And if their execution on innovation or brand recovery efforts seems to be falling short, maybe the Blue Buffalo launch hits snags or doesn't gain traction quickly. That could definitely worsen market sentiment and accelerate those drawdowns like we saw after Q4.
Okay, clear risks there too. So given those possibilities, what's the one key thing you'll be watching for most closely in this report?
Based on what management themselves are saying, the absolute key metrics have to be organic sales volume growth and the margin trajectory. Are margins stabilizing or improving even as they invest?
Volume and margins. Got it.
Those two tell the story of whether the strategy is working. And of course, any updates on the Blue Buffalo rollout will be critical too, given the focus on innovation. It really brings up that important question. How effectively can they balance investing in growth with maintaining profitability right now? It's tough.
Okay, bringing it all together then. Considering the recent misses, the stock reaction, the macro pressures, but also management's stated plan, what's our overall leaning for General Mills heading into this report? Cautious, optimistic.
Given everything we've discussed, the multiple recent earnings misses, that really unsatisfactory post-earnings stock performance, the macro cost pressures are leaning is, I'd say, neutral to cautiously bearish. If I had to put a number on it, maybe a confidence score of 6 out of 10. So
Mm.
moderate confidence in that cautious view.
Moderate confidence. Why not more strongly bearish given the recent track record?
Well, a couple of reasons. First, the consensus EPS and revenue expectations from analysts, they already seem to factor in some of these recent negative trends. The bar might not be excessively high.
Okay, expectations might be tempered already.
Right. And management has been very vocal about their turnaround intentions. There's a clear plan, even if execution is the question mark. Plus, the options market seems to be suggesting moderate event risk. It's not signaling extreme doom, more like the outcome could still swing either way. So moderate feels appropriate for the confidence level.
That makes sense. So for listeners thinking about this, maybe considering options plays or equity positions around the report, what should they keep in mind? Any strategic considerations?
Sure. For options traders, that elevated implied volatility you usually see before earnings, well, it might offer some premium selling opportunities. Maybe for short-term, range-bound strategies if you think the stock won't move dramatically.
Selling volatility, okay.
For equity investors, it might be prudent to just wait. Wait for clarity after the earnings report unless you have really high conviction in their turnaround strategy already. Because, as we said, execution fails, that could certainly increase the downside volatility. So maybe patience is a good approach for many right now. Ultimately, what we've discussed today about General Mills really just highlights this ongoing tension you see across the whole consumer staples sector, doesn't it? This constant push-pull between trying to maintain margins and needing to drive volume growth, often through innovation like that Blue Buffalo rollout. It's a really critical balancing act.
Well, absolutely. It's the core challenge. So what does this all mean for you, the listener? As you reflect on General Mills' upcoming earnings, maybe think about how companies in this whole consumer staples space are adapting to changing consumer habits, to these persistent economic pressures. And ask yourself, how might successful innovation, like a potentially big launch in fresh pet food, truly redefine growth in what's often seen as a mature, slower growth industry? It's definitely a question worth pondering as we watch these reports unfold. Their approach could be a lesson for others. Thank you for joining us for this look into General Mills. Don't forget to subscribe, like, and comment with your thoughts or any companies you'd like us to discuss next time. And if you feel like supporting the work we do, check out that Buy Us a Coffee link in the description. We'll be back soon with more insights to help you stay well informed.